Don Luskin, the biggest jump in manufacturing prices on the index since 2004. Food exploding, raw materials exploding. I ask you, when is the big inflation coming?
I don't know. We're not. What's the definition of inflation, Larry? The textbook definition is an overall rise in the overall price level. Now, it's always easy to focus on particular things that are making big price moves up or big price moves down. You focused on the ones that are making big price moves up. I could talk about semiconductors that are making big price moves down. I could therefore make the case that there is a deflation. But so far, we are really not seeing any overall inflation in this country. And from Ben Bernanke's standpoint, that is a problem. He thinks we have insufficient inflation. Now, I know that's like the Surgeon General of the United States saying we have insufficient smoking, but that is what he thinks. And I think he's right. Our economy is habituated to a dial tone of about 2% inflation. Like it or hate it, that's the way it is. And so when we have what we have now, which is about 1% inflation, that feels to our economy like deflation. We've still got a lot of debt to get out from under in this country, and it's not easy to do when you have any deflationary tendency at all.
Michael Pinto, do you see a lot of deflationary pressures?
I don't see deflation anywhere. Maybe housing prices are declining. But Don is looking at a textbook definition of inflation. I'll look at a dictionary definition of inflation. That is an increase in the money supply. You know, shares of Enron went to zero overnight because the perception of
what dictionary would that be, Michael?
Thank you for interrupting me. Can I finish my point, Don? Thanks. So,
what dictionary would that be?
Webster's. Merriam-Webster, maybe you've heard of them. It's an increase in the money supply. Inflate means to grow.
That's what inflation is, according to
means to grow or expand.
We'll check that out.
But Enron, yeah, check it out. Enron shares were belly up overnight. And a country's currency represents the strength of the United States. The U.S. dollar represents the strength of the United States. And if global investors think that we have to monetize all of this debt away, then the value of the currency is going to fall, as I predicted it would.
This is all very theoretical.
Let me get specific. Can I get specific? How about 81.6 on the prices paid?
That's what I'm trying to get.
How about surging commodity prices? How about global food riots? This sounds a lot like 2007, doesn't it, Don?
In all seriousness, Don, I want to ask you, you see these commodity prices rising, food and energy and raw materials, and they're very, very substantial increases. Food is up 41% year on year. Raw materials up 28%. Now, what I'm basically asking is, when do these things circulate through the CPI? For example, there are reports that airline fares are rising, that hotel rates are rising, that shipping costs are rising. Those are the kinds of things that matriculate through the CPI, Don. And usually commodities are an early warning signal. I want to ask you about that. Is the same pattern going to happen now?
I have to, you know, Larry, you and I have been comrades in ideas for many years, and you know that I have, for many years, subscribed to this canary in the mine shaft idea about gold prices and commodity prices. Everything you're saying is music to my ears. The problem is that for the last decade or so, it just hasn't worked that way. The canaries that we're using in this mine shaft just aren't functioning right.
How about the dollar?
Because they've been what about the dollar? The dollar's been in a trading range for 3 years. You know, and you can wave the American flag and say the dollar is supposed to be some kind of patriotic symbol. I don't know what kind of economic argument that is. The fact is that by any rational measure of inflation, if you look at the overall level of prices, we are not experiencing inflation in this country. And you say that food prices are exploding, but in the last reported CPI month, which was December, food price inflation was half of healthcare inflation.
But is that going to change, Michael Pinto? I mean, in a serious way, in a very specific way. Energy, gasoline, food, supermarkets. You're seeing isolated examples of companies that are raising their prices. When does that affect the consumer price?
Well, it's squeezing margins now, and it's going to be passed along to the consumer. Look, everybody should understand by now that Bernanke is trying to bail out the real estate market. He's trying to bail out state pension plans, and he's going to bail out the national debt, which, by the way, is skyrocketing. The CBO came out and said that our nation's debt will increase by $12 trillion. And the only way we're going to address this, Don, is by a massive monetization. And that's what Bernanke's doing. And people across the globe are losing faith in the currency's purchasing power, and it's spreading across everything: commodities, food prices. If you look at any of the prices paid components,
yeah, it's spreading across everything except the price of the dollar. What are you talking about? You're acting like the dollar's making new lows. It's just not.
Against the Canadian dollar, against the Australian dollar.
Gentlemen. All right, the inflation debate to be continued. Thank you, Michael Pinto. Thank you, Don Luskin. I appreciate it. Coming up on Kudlow.